President Trump is at the World Economic Forum in Davos, Switzerland. So what could go wrong this week? Never put it past President Trump to say something or do something that's going to move the market. And lo and behold, this week and this weekend in particular, his talk of annexing or taking over Greenland and imposing tariffs on the European Union countries, that hit the market pretty damn hard, and interest rates actually went up a lot on Monday. We'll get into that. But there was some other economic news that came out, and ultimately, by the end of the week, we're pretty close to where we were when we started it. But let's break down first the big three. We have prices. Prices are steady, not a lot of movement in prices. Inventory is down still, at least locally, but not, we're still near 10-year highs, but just down a little bit from where we were in the past. And rates, they were up a little bit, but I'm going to say sideways. We're right around the 5.75 range, still below 6%. Let's look at the headline news. We had a big inflation report come out this week, the PCE, and it held steady. Pending home sales, we saw a decline. We'll get into maybe the reasons why. And then, will President Trump's policies that he's been touting to make housing affordable, will they make housing great again? We'll get into that. And then, what's the second biggest reason first-time home buyers don't buy homes? We know the number one reason is they don't have money for a down payment. But what's number two? We'll get into that. And then VA rates, they rose slightly this week. Let's go into the PCE, the Personal Consumption Expenditure Report. This is really a 2-monther here due to the government shutdown. And there really no surprises at 2.8, which is kind of where we were for both the headline and for the core. So still below 3%. That's great news. And this is exactly what we expected to see. This is what all the economic experts said would come out, and that's what happened. Now, if you look at the annualized core run rates, though, 12 months at 2.8, 6 months at 2.6, 3 months at 2.2, what that is showing is that overall, it looks like the trend on inflation is that it is coming down. That's great news, especially for core, because core is the one that the Fed wants to get down to 2.0. So on the way, not going up, and there's people are still complaining, but it's still unaffordable. Well, keeping inflation low doesn't erase the inflation that we had in the past. So all those increases in prices, they're not going away, right? They're going to stay higher. But the key moving forward is we don't want to see inflation get any higher. What we'd like to see is income get higher so that we can offset that inflation. But we're not necessarily seeing that right now. So inflation, good, still great as we head into next week, which is when the Fed meets and they will make their decision on whether to raise or lower the Fed funds rate. I don't think they'll raise, but maybe they'll keep it the same. But maybe they'll lower it. We'll see. We had our pending home sales report for December come out. It was a real stinker. Month over month down 9.3%. Year over year down 3%. Current sales pace, though, is still above 4 million. We're at 4.35 million, so those are good numbers. And you look at December, we had 2 holidays that fell on Thursdays. We had some inclement weather, so understandable that you're going to see a decline in pending home sales, although 9.3% drop is more than the 0.3% drop that was expected. Expect a rebound in January, February. Again, lower rate. We are almost a full point lower than we were about a year ago. So expect to see pending home sales start to pick up again here coming as we get into the year. Will President Trump's policies make housing great again? Well, the answer to that is maybe. Here's what's being proposed. So he wants mortgage rates to come down, and his efforts so far are helping. When he told the GSEs, Fannie Mae, Freddie Mac, to invest $200 billion in mortgage-backed securities, that brought interest rates down, and they've stayed relatively near that level. So very good news there, but that's short term. It's not going to make the rates go down any further than they already have. There are some possible policy ideas that he has out. Being able to use 401k funds for down payments, and then affordability-focused mortgage reforms that he's mentioning. Those will help, but again, it's kind of more of a short-term thing, although the 401k would be great. Parents being able to take money, investment money, and using that and not paying the capital gains on that if they use it for down payment assistance for their children. And then, of course, increased scrutiny on institutional investors who have been buying single-family homes. Those are what's being proposed. Now let's talk about what we can expect to happen. These policies, they are going to be incrementally helpful, but they're not a silver bullet. They're not going to save the housing industry, which has been in a slump. The housing industry has been in a recession the last 3 years. We're not going to get to pre-COVID. We're not going to get to 3.75% VA or mid-fours for conventional. That's not going to happen anytime soon. We need more treasury yield declines. Right now, the treasury, 10-year treasury is at 4.17. And we need that 10-year below 3%, which is where we were before COVID, right around 3. But we're not there, and it's not likely we're going to get there. Now, let's talk affordability versus the supply reality. They're two different ends of the spectrum. They should be together, but they're not. Lower rates alone don't fix affordability. All right, especially because prices remain high. They're not coming down, they're high. We need increases in income. All right, we need that down payment assistance. And more importantly, we need more homes. Limiting the institutional investors buying single family homes, that's small kind stuff. That ain't gonna make that big a difference because they're not buying that much in relation to all the single family homes out there. And you also have to get, realistically, that's something that Congress is gonna have to pass. He's not like President Trump is gonna wave the wand and that's gonna happen. And I'm sure he'd like that, but that's not the way it works, people. So really the true relief is gonna be, again, this is the law of supply and demand, baby. This is economics 101. You build more homes, you provide more supply, more options, prices will come down, more people will be able to buy, but we're just not seeing that, and the builders are not building enough homes. So what's the bottom line? Well, Trump's housing policies are going to have an impact, but it's only going to help at the margins. It's not going to save the entire housing market. We have structural issues, rates, supply, and prices. They remain the main drivers of the housing market. And buyers are spooked right now, and they need strategy, they need education, and they need timing to go with those policy changes. They need an advisor, someone like me, who can help educate them on buying a home and the things that they need to do to buy a home when they're ready, because nobody wants to wait till 40 to buy a home. That's slowing America down. We need people to buy homes sooner. We need people to start families sooner. And one of the things people want before they start a family, it's a home. They don't want to be having kids and living with their parents. They want to have their own home and have their kids. So, will Trump's policies make housing great again? No, they won't, but they are a good start and certainly putting us in the right direction. Hey, and if policies aren't going to save affordability overnight, what can buyers control right now? We know the number one impediment to first-time home buyers buying a home is not having the money for a down payment. What's number two? It's credit. Kids don't know about credit. First-time homebuyers don't know about credit. They don't realize that credit score they have is their financial report card. You get F's on that financial report card, you ain't buying a house. Hell, you can't even rent a house. We find that out too late. I say we because I was that dude who had terrible credit because I got credit cards, maxed them all out, paid the ones I wanted to, figured, I'll pay that one next month. And I got into bad credit problems. I never was educated on credit, and I certainly didn't have the resources to educate myself back in the day. I certainly didn't have a good mentor in that respect. So here are some credit tips for home buyers. The first one is pay your bills on time and lower your balances. You want to have less than 30% of all of your revolving credit, and those are basically credit cards. Less than 30% of all of your revolving credit in use. If your credit cards are maxed out, Well, guess what? You are a risky buyer, no matter what you're trying to buy. So you want to keep it below 30, ideally below 10% of your revolving credit amount. And don't be that dude who sticks his head in the sand and thinks, my credit's okay. Check your credit report. Check your credit report often. Get an app. I'm going to share an app from Key Steps. I use it. There's no ads. It just basically tells you what your credit score is. It's going to be down below. Use it. It's free. You're not going to get spammed. It's great for running scenarios. How can I improve my credit? But check your credit report. And you can always go to annualcreditreport.com. You get one free credit report from each of the 3 major credit bureaus, Equifax, Experian, TransUnion. One free per year. That's 3 quarters that you can actually pull your credit for free and just see what your credit score. You can see where your credit's at. I think that's free. It's free. Even this app, Key Steps, which again, I highly recommend it. It's great. It also helps you if you're saving money for that down payment. And then the final thing, don't close your accounts. Don't use them, but don't close them. When you close them, you lose your basically available credit to use. So if you're using 50% of your credit and then you close a credit card you just paid off, well, now you might be at 75% usage on your credit because you just dropped $10,000 because you closed that credit card. So don't close credit cards. You can cut up the cards, you put them away in hiding. That's what I've done in the past, but don't close the accounts. Keep them open. And again, down below, Key Steps app, you got to use it. It is a great app. It will help you with your credit. It will help you with your savings. Bottom line, it's going to help you buy a home. And let's look at VA rates. VA rates, you can see they were down near 5.7% as we really started the week, or right as we ended the week. They shot up. You see this big, looks like almost like a giraffe head. It kind of shot up. You got a big neck. That's the Davos Trump jump, and they started coming back down a little bit today, Thursday, thanks to a really mostly solid inflation report. So that's great. And what's going to happen next week? Well, the Fed is going to meet next week. The Fed meets next week. They will make a decision. Really, it's anybody's guess if they're going to lower the Fed funds rate. They're certainly not going to raise the Fed funds rate. There's no reason to, but they should lower the Fed funds rate. That would be very good for interest rates, but there's no guarantee. So expect us to stay right or just under 6%, unless we get a really good news from the Fed and they lower the Fed funds rate. All right, have a great weekend. Aloha.